Today we're going to talk a little bit about SMT really quick. This is the second video I've made now in the new place, and this room is yellow as heck. So I can't really seem to get my camera to look good, my camera to be positioned well, and that's just the way that it's going to be, I think. I don't know, I'll figure it out. But SMT. So SMT is, as I talked about in one of my last videos, it is under the change in state of delivery umbrella. It does tell you there's going to be a change in the state of delivery. Now, SMT is a mismatch in highs or lows between correlating assets. So I trade NQ, so I'm looking at ES and YM. You could do other correlating markets if you trade Forex and things like that. I'm not familiar with a lot of Forex stuff. I trade the indexes, so indices. So that's what I'm going to be talking about. And so what SMT does is it confirms that a reversal idea is valid. It doesn't tell you there's going to be a reversal. It doesn't mean a reversal is coming or anything like that. SMTs happen all over the place and they fail all over the place. What it means is if you already have an idea for a reversal, SMT is a great confluence to kind of validate that. I don't take a trade without SMT. Most of what I do is reversals, and I don't take one without SMT. That's just a deal breaker for me. It's my last checkbox. There has to be SMT, and that's the way that it is. So I'm going to show you really quick what SMT looks like with two examples. So right here is NQ, up here is ES, and down here is YM. And I have all of these running on a screen while I'm trading, and I'm looking at as price is moving, like NQ will make this low, so will ES, and then I'll watch as the price is coming down to see if one or all take that same low. If not, then there's a crack in that correlation, and that's what SMT is. So as we were watching price do this and start coming up, I noticed that NQ didn't take this low here, but YM did. YM dipped a lot further into this imbalance here before coming up. NQ was stronger and did not have to. In fact, it kind of already did dip into an imbalance. It didn't need to come back. So it created a crack in correlation, confirming we're about to reverse, and look what happened right afterwards. So I was already in off of this imbalance. So I did take a trade without SMT. I think there was an SMT between the indices way back in time. NQ took a low that ES didn't or something like that way back. And we'll talk about that. So this is on the 1 minute time frame, and this is primarily the time frame that I use, but you'll see this low was made and this low was not taken by NQ. This low was made and that same low, you see how my cursor is lining up on both sides here. And YM did take it. That's SMT. There's another example just over here, right at about 10 a.m. on Friday. So let's scroll. This one was on ES. There we go. So you'll see market opened and every indice made some kind of low. ES and YM made a big wick and NQ didn't, but we kept moving down and ended up taking out that low on, actually that's an SMT right here. I didn't even see this one. So you see how ES made this low wick, came back up and then traded below and took it out. That from here to here. We'll just mark it as SMT so it's easy to see. So you see that. Now look at YM. YM made this, see how my cursor lines up? Made this low and never came back down to take it all the way up here. So that's SMT here as well. And look what happens. Up we go, up we go, up we go. You can see each indice has different strengths. Since YM didn't drop as far, it wasn't as weak, thereby it was stronger. It had a stronger impulse up. The one I was going to point out was between ES and NQ, because I trade NQ, so that's what I was looking at. Right before the 10 o'clock open, ES and NQ made this low. They both came up a little bit, just like earlier, and then came back down. ES took it out. NQ came back down and did not take it out. So you see there's a mismatch in lows and highs there. What happened afterwards? Confirmed the reversal. Took a trade off of this as well. So you see when they mismatch there, that's what's called SMT, and that helps confirm a reversal idea. Now your reversal idea has to be framed with other things. Your trade strategy, says you came into a high time frame PD array and made a market structure shift. That's a reversal idea. That's a change in state of delivery, and then the SMT in that umbrella confirms that change in state of delivery. So just because there's SMT doesn't necessarily mean anything. You have to have the framework of a reversal already, and SMT kind of checks that final box of like, yep, this is going to be a valid reversal. The other thing that makes SMTs very high probability, because again, SMTs happen all over the place, is incorporating a time element, like the 10 o'clock candle open, the 9:30 market open, a macro. You see how this SMT happened within a macro. Those kinds of things are important because SMTs happen frequently. So to incorporate time over price, to incorporate time into a reversal idea, a crack in the correlation between the assets, that just raises that probability. So I really like to see that. It doesn't always happen. One of the lows can be made in the macro. The other one that creates the SMT can happen outside of the macro and vice versa. As long as the macro is near that reversal idea, I run with that. I like to see that. So, that's pretty much all there is to it. You just watch each candle go by, and when you see a major low, actually, you know what? Let me talk about time frames, because I know that's going to be a question. So when I'm not seeing SMT on the 1 minute, the 1 minute is a very zoomed in time frame, right? So when I'm not seeing SMT at the internal lows right here, what I end up doing is zooming out, and I'm like, okay, is there SMT at this one or this one? And I'm like zooming out with my scroll wheel here to try to see any other SMTs, and you can only really see so far. So if I can't find what I'm looking for, if I can't see whether or not there's an SMT to confirm my reversal idea, I'll just go like up to the 5 minute, so that the chart time frame is zoomed out, and then I can also continue to zoom out and see even further stuff. Now I can see all the way over here. So it doesn't really matter what time frame you're looking at. You just go up. I start on the 1 minute because that's what I trade, but just go up time frames as a zoom. Like in this case, the SMT I was looking for was internal only. It wasn't a big external one, so you're not going to see it on a zoomed out time frame. But when you zoom out, because you're not seeing anything internal, you have to zoom out to try to find something external. So that is okay. And you're not going to miss anything or not find what you're looking for. Pardon me while I got this weird split in the beard. I don't know what that's about. That's okay. Yeah. So it doesn't really matter what time frame you're looking at. It's just the further away you are, the more kind of big picture you're going to be seeing, where you're going to be seeing much more, major highs and lows. Even this one I marked is on the 5 minute. They're separate swing points. So they have to be swing highs or lows. Those are the only ones I look at. I've seen some people draw SMTs on highs and lows that aren't swing points. And I think that's a little further along in the advanced kind of look at SMT, but I just use swing points. It works for me. I never really have trouble not seeing what I'm needing to see. So hopefully that makes sense. But obviously, if you have any questions, comment. There's a link tree in the description if you want to join the Discord and talk about it. But yeah, that's SMT. I use it all the time. I don't take a trade without it. It's a beautiful, beautiful thing. So, yep, hope you got something out of this one, and ask any questions if there are any. Okay, thanks. Have a good one.